Good morning, everybody. It's Wednesday, September 20th, 5:29 a.m. Central Time. Grain market's a little bit higher this morning. December corn futures up a half cent at 476 and three quarters. November soybeans up 1.5 at 13.17. December Chicago wheat up 9.5 at 593 and a half. December Kansas City wheat up 7 and three quarters at 738 and three quarters. December spring wheat up 6 and three quarters at 786 and a half. Mackenzie, before we get started today, I've got to review and run through and clarify a couple of things about this corn chart I had yesterday. So in yesterday's video, I posted this corn chart, and essentially what I did was I divided the corn market into three eras. You've got your decade prior to ethanol. And in that era, I know I misspoke in the podcast yesterday. In that era, the decade prior to ethanol, your bottom of the barrel corn price was like $2 down to $1.75 on the board. That was on the board, not cash prices. I know cash prices were worse than that in a lot of instances. And then, post ethanol, this second era I've got outlined here, your bottom of the barrel corn price, it reached a new plateau. Your new bottom of the barrel in that time frame from say 2006 through mid 2020 was like $3, maybe slightly below $3. That was your bottom of the barrel corn price on the board. Cash, of course, different. The post-COVID era, I feel like could be a new era. And let me make this very clear. This is not a prediction for me. I don't do predictions. I'm not in the prediction business. But you could make the case, perhaps, that your new bottom of the barrel corn price is higher than it used to be. And why would you make that case? It's because of inflation. It's because of the money printing that was associated with COVID. It's because the price of everything on the planet, anything certainly that's priced in US dollars, has increased by 10, 20, 30, 40, 50, 60% in the last 3 years. So I'm posing a question here. What is the new bottom of the barrel corn price? I don't know or claim to know. I know that a lot of you guys responded and said, Joe, corn in the 460s is already cheap. And yeah, it is, because it's below production cost for a lot of you guys. But that doesn't mean we're at the bottom of the barrel yet. Just because we're below production cost doesn't mean we're at the bottom of the barrel. We spent a lot of time below production cost in each of these previous areas. So this is me posing a question. This is not me making a prediction. I'd like to hear what you guys think. What do you think the new bottom of the barrel corn price is? Is there a new bottom of the barrel corn price? Maybe it's still $3. I don't know. I don't think it is. I think it's probably higher. But this is a question that I'm posing. This is not a prediction for me. Let me make that very clear. Okay, now that I'm done with that, we can jump into our first story.
Alrighty, so Cargill's annual net income during fiscal 2023 dropped 43%. The company reported a net income of $3.81 billion, down from a record $6.69 billion the prior year. Profits were impacted by a decline in the company's meat business and an increase in costs. The company's annual revenue rose 7.1% to a record $176.7 billion, but a 61% increase in interest expenses and other expenses reduced earnings. Despite a significant drop in net income, Cargill still posted its fourth most profitable year.
So, Mackenzie, if you had to guess, a little bit about the cattle business and how this all works, and that was part of the reason, or the reason mentioned here why they were down a little bit. Is Cargill going to stay down, or will this last a couple of years and then they'll bounce back?
I would expect it to stay down and it will bounce back. And when it bounces back, they will make plenty of money.
Okay, so it's for this reason that me personally, and maybe this is kind of a side note here, you don't really want to bet against large U.S. companies. Cargill is not a public company, but they are the largest privately held company in the United States. You don't bet against large U.S. companies because they are masters at maintaining margin. They are the best of the best in terms of making money. That's why they're as big as they are. That's why they're in the S&P 500. Cargill's not in the S&P, but if they were public, they probably would be. So Cargill is going to be just fine. The deal in the cattle market with these high prices, it's cut into their margin certainly, but they will bounce back. They will be just fine.
Early morning rain fell across parts of Missouri and Arkansas. However, aside from some scattered rains in Iowa and Illinois, most U.S. corn and soybean areas have been dry this week. There is some conflict in the weather models this morning. The 10-day Euro is much wetter than the 10-day GFS for areas of the Mississippi River Valley. The GFS is drastically wetter for Illinois and Indiana in particular. The river is 8.2 feet below normal at Memphis this morning. Government projections indicate that levels may drop another foot by October 1st.
Okay, I think we had some bad copy there, but the euro is the one that's my fault. The euro is drastically wetter. And this is about as big of a difference in the models as you'll ever see. Like, look at Illinois and Indiana on the euro, super wet for the next 10 days, and then almost nothing when you look at the GFS version. This is just one model run. I'm sure it'll change here later this morning. The river situation is projected to not be as bad as maybe they were projecting a week ago. They're talking levels down like maybe 10 feet below normal by October 1st or just above that. They were talking like maybe new record lows just a week ago. I don't know how far these rains will go. If these rains are real, maybe looking at the government map is the best version of it. I don't know. But if these rains are real, it's really dry in these areas. So I don't know how much runoff you're going to see. I don't know what this is actually going to do to fix river levels. This river situation continues to hurt corn basis, hurt spreads. We'll play a game this morning. If you guys are watching on YouTube, let's see if we can find the lowest cash corn bid in the country. If you've got something that's like super, super cheap and your basis is absolutely terrible and you think you may be in the running for worst cash corn bid in the country in your area, drop it in the comments and make sure you include your location. I know there's a lot of stuff in the low fours out there. I think there may be some stuff on the lower areas of like the Delta where basis is even substantially worse than that. I've heard some rumblings about 3 handles out there in terms of cash corn bid. So if you've got a really bad cash corn bid, drop it in the comments. We would be very much curious to see that.
So if you guys are not already subscribed to our premium content, you need to do so. You won't find stuff like this anywhere else. Joe, can you tell me what you put together yesterday?
We need a rally in these markets, right, guys? One of your potential possibilities or opportunities for a rally may occur during the South American growing season. Brazil, especially, is such a big player on the export market now, and as it relates to soybean production, corn production, they're big competition for us. This is maybe your next chance. What I did in yesterday's video was I did kind of a primer on South American weather markets. If there's going to be a rally, when will it occur? It's different for corn versus soybeans. If you guys want to see this video along with all the other premium stuff, that video with Paul regarding sustainable aviation fuel and what you guys need to do, that one that was out last week, is an absolute must watch. Go to standardgrain.com this morning. You can sign up. It's $50 per month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Ton of info direct from us, guys. If you sign up, I'll blast you over this morning's email right away. That includes the 6 most recent premium videos. Check it out.
Brazilian grain production is forecast to drop. According to CONAB, which is Brazil's USDA, total grain production this season is expected to fall 1% from the prior season to 319.5 million tons. Brazil's overall corn crop is forecast to decline 9.1% to 119.8 million tons. Despite the reduction, Brazil is still expected to surpass the U.S. as the world's top corn exporter. Brazilian soybean production is slated to increase by 5.1% to 162.4 million tons.
Okay, so the soybean projection, this is a projection. They're going to plant the most acres any country's ever planted. It's going to be, I think, 111 or 112 million acres of soybeans. That 162.4 in soybeans, if realized, you need weather to cooperate. That, of course, would be the largest soybean crop any country has ever produced, behind Brazil's own record from this past year. There's some conflict, CONAB versus USDA, as it relates to corn production, both for this past year and for this upcoming year. This past year, CONAB has the crop at 131.9. USDA is at 137. That's a big difference. And then there's a big difference for the projection for this coming year. CONAB's at 119.8. USDA is at 129. I'm not sure exactly what the reason for the difference is there. But in any case, this kind of drives home the point that, yeah, Brazil is becoming a bigger and bigger player every year. I believe on the export market, Brazil is a discount to U.S. corn at the Gulf to the tune of maybe 25 cents. So we're still not competitive in terms of U.S. corn versus Brazil right now.
With inflation easing, the Federal Reserve is expected to hold rates steady this week. However, another rate hike by the end of the year is not out of the question. There's also a chance the Fed may reduce the number of expected rate cuts next year. Since the Fed's last meeting in July, economic data has been mixed, including a recent jump in the August CPI report. A new policy statement and interest rate decision will be announced today at 1 Central Time, and Jerome Powell will speak after that.
Yeah, so this could be a big deal for the outside markets. It's interesting to me that people are still talking rate cuts for next year. I guess it's possible. We're still not quite to the Fed's targets in terms of inflation. When you look at the CME Fed tool, which is a gauge of how Treasury markets are pricing in rate hikes or cuts or pauses, there is a 99% chance, according to Treasury markets, that there will be a pause, no hike today. There's no meeting in October. When you jump to November, you've still got a 73% chance of no hike. And then when you jump to December, still like a 62% chance of no hike. So some people think the hikes are over. Some people think you may need more. A lot of it's going to be contingent on the inflation situation. One of the things that sticks out to me right now is the rise in energy prices, gas prices, diesel prices, crude oil are up. That's all inflationary in nature. So this is not over by any stretch of the imagination.
On Tuesday, in front of the UN General Assembly, President Joe Biden tried to rally support for Ukraine in the war against Russia. Biden stated that no nation is secure if Russia is able to overtake Ukraine. The Biden administration is asking Congress to approve an additional $24 billion in security and humanitarian aid to Ukraine. House Republicans, however, are standing in the way of that request. Congress has appropriated approximately $111 billion for Ukraine since the conflict began last year.
I don't know what to make of this. I mean, I still think in the back of my head that there is some sort of risk as it relates to the grain markets in the Black Sea situation. Biden essentially is pushing for the war to continue, and this appears to be, the longer it goes, this appears to be one of these never-ending wars. That's the way that it looks to me, at least. So the longer that it goes on, the more chance there is perhaps for an escalation that could disrupt Black Sea grain flows. And we haven't really seen that to a degree that is enough to rally the markets, but it's still a chance that's hanging out there. The longer this thing goes on, and it appears to be a forever war at this point, like we've seen with previous wars in the past we've become involved in. I don't know. I feel like there's still, I know the wheat market, the corn market hasn't reacted to this stuff in forever. I still think there's that chance out there. What did Cal do yesterday?
They were lower again, but not as big as we saw on Monday. Feeder cattle futures closed an average of 72 cents lower. Live cattle futures closed an average of 56 cents lower. Box beef continues to drop. Choice ended the day at 302.12. That was down $3.20. Select ended the day at 281.78. That was down $1.63.
Outside markets this morning, U.S. dollars off a little bit. Stocks are up marginally. Bonds are up marginally. Be prepared for some volatility when that Fed releases out at 1 o'clock Central. Crude oil's backed off a little bit, down 77 cents this morning at 89.71 in the October WTI. Everybody have a great day. We'll talk to you on Thursday.